Hi, family. This is Willie Green, Dr. Willie Green, aka Dr. Financial Literacy, coming to you with episode or day 13 on my journey of refinancing my properties to try to conduct an experiment. That experiment is using this financial instrument, hopefully called an all-in-one mortgage, where you're combining your personal finances with also your institutional finances, and you're able to wipe out your current or existing mortgage and replace it with a HELOC. And replacing it with a home equity line of credit, also kind of called the all-in-one, you're able to dump your paychecks in, check deposits in, bill deposits in, and it helps to bring down the average daily balance of your mortgage, or what used to be your mortgage, every day on a daily rate versus a 30-year amortized rate, which could be higher. So again, this is day 13, and if you like more information, you can look at the previous days in general. Let's go ahead and get started with a brief PowerPoint. Okay, sorry. Okay, again, my name is Dr. Financial Literacy, and this is day 13. My experience with Velocity Banking, HELOAN, HELOC, all-in-one mortgage in general, and just trying to educate the community based on my experience of trying to acquire one of these products to reduce my overhead and the interest that I'm paying. Just a little bit about myself. I was born in Savannah, Georgia. I grew up in public housing. Currently a political economist, which means I examine the relationships between politics and the economy. I've worked as a security supervisor, restaurant supervisor, agricultural, government manager, and elections, dishwasher, and etc. So I've did a little bit of a lot. I went to Savannah State in a government-sponsored program called Upward Bound. I was later able to obtain my BS in political science, my master's in urban studies and public administration, and my PhD in political science with a concentration in research. I currently operate multiple businesses, including financial literacy, try to educate the community. I filed bankruptcy in 2009. I completed high school at the age of 20. I was also a teen parent, and I had a life-changing event. And these are just three pictures of the public housing that projects that I grew up in. The agenda today, we're just going to just some general introduction, talk about my story, talk about Green Group Consulting, different types of classes, miscellaneous ideas, the benefits of financial literacy, and a number of other items. And if you have any questions. Okay, that life altering event of mine in 2002 in Bulls Creek, the Yellow House. I used to sit in front of the house and read where you see the red mark. One night, a voice came to me while I was reading from the back seat of the car that told me to get out. I looked over my shoulder and thought I was pranked because in movies, historically back in the 80s and the 70s, certain minority groups and men were the first to be killed, although there are other less stronger people that was able to pass them by and survive. So when I was reading, the voice came to me the first time. I ignored it, looked over my shoulder. 5 minutes later, the voice came back to me again, get out. I was like, dang, man, I used some explicit. I got out the vehicle, went into my yellow house, sat on the couch, started reading. 10 minutes later, a drunk driver came, totaled the vehicle, pushed it in front of this tree here. If I would have stayed to been in the vehicle, yes, I would have been dead. So I'm trying to use this second life that God has given me to help others, to be a good steward of the resources that they are provided. In doing so, I went on after that accident and life-altering event to acquire 4 different properties, and here's one in Riverside, Georgia, another one in McDonough, Georgia. And this one in McDonough, Georgia was the first one that I started off with. I purchased this from the Housing and Urban Development, and with I think 3% down. And I took on 2 roommates that didn't work out, took on a third roommate that worked out. She was an older woman commuting between Atlanta and her hometown. By the roommate staying with me and what they call house hacking. And I did not know I was house hacking. I was charging $400 a month for probably 11 years, and that helped me to acquire this property and also the previous property. Her $400 a month also helped me to acquire this property, and her $400 a month also helped me to acquire this property. But I lost this one in foreclosure. Um, in general, in 2009, that was a community that was all in the same utilities. The HOA was not taking care of what needed to be taken care of, and we all lost our properties. They condemned the entire community. Now getting to the fixed rate mortgage, this is what I wanted to show. Currently with all the three properties that I have, they're totaling $145,000. They're all on 30-year fixed mortgages that were acquired in 2005, 2008, and 2009. What I'm attempting to do is to consolidate all of them into one mortgage. That's where I initially started out, looking at a new mortgage or refinancing them all into one. This new mortgage would have been $145,000. The first month's interest would have been, or to be $694, and only $151 going toward the principal, and that would have gave me a monthly payment of $846. Now, if you looked at the previous videos, my monthly payment without taxes and insurance is about I think 1,200 for all three properties that I'm currently now. So yes, this 30-year fix would have combined them, but it would also rolled in some closing costs, and I would have been starting all over again with my amortization table. Now looking at what I'm attempting to do is get a home equity line of credit or an all-in-one mortgage. The home equity line of credit would kind of like set up an account that I can use for putting money in and debiting money out, taking money in and taking money out. That's a home equity line of credit. And then there's this all-in-one mortgage that I'm talking about that I'm trying to use, where it's similar to the HELOC, except a particular vendor sets you up with an account. They give you the money. You got a whole dashboard. You can look at charts. You can look at graphs. So it's more in depth. But the same thing you can kind of like do with a HELOC. So in this demonstration, I'm just looking at what it would be like if I had a HELOC provided to me, home equity line of credit, pay off all three mortgages, and then start over. Now, and looking at the 30-year fix, my payments would stay about 846 for the principal and interest over the 30-year period. And I could throw some extra money at it and reduce it in general over time. But that payment, 846, would stay the same. And the only thing that could change is the taxes and the insurance may push it up. So right now, it's an additional about $350 a month extra that I'm paying on each property as the taxes and insurance, and that has continually to increase. So your mortgage will generally increase as a result of the what's called escrows, which is your insurance and taxes. Now, in looking at the 40-year variable, which one company, National Credit Union, is offering me, it'd be the daily interest on the HELOC that I'm paying on. And I want to use a strategy of putting a specific amount in, which is kind of like the all-in-one strategy, and it breaks down the balance, which is really the main principle that you're hitting every month. So if we look at, say I did get the 30-year fix, but then a day later I go over and qualify for $145,000 as a HELOC. I'll take that HELOC and pay off the entire mortgage. I won't have a mortgage, but I have a HELOC. That HELOC allows that credit union to have a lien on the property itself. So if something happens, they have first rights to obtain it if I can't pay this HELOC. Now, in this particular example, the interest rate that I'm looking at on the HELOC is 18%. Now the HELOC is ranging from 6 to 18%. So there's a flow, there's a low and a high that by law that they can go up. And that's one of the things about being a political economist. I'm always looking at changing laws and rules and regulations and how it affects individuals and groups in particular. So I'm looking at what's called the Dodd-Frank law, and I think it has an impact on what they can charge and the minimum and the maximum that they can charge. So at 18% daily interest, I'll be paying about $72 a month. Now they actually started me off at 9.36, but I decided, okay, if they can go for the maximum, I'm gonna just look at what would it maximum be on the chart, because in your HELOC, when you look at the disclosures, it'll tell you that we can start at this particular number, like 936, but the very next day, because it's variable, they can go up. And I'm willing to accept the variable rate because I think by using this strategy of what they also call velocity banking, putting in extra payments and everything that you can throw at it to help reduce it. So at $72 a day, you can see up until I get paid on the 15th, then I'll drop in $1,686.70 of being paid every 2 weekly. Now, one of the things that I recently did was I adjusted my tax bracket so that I can get a little bit more now throughout the year and then pay Uncle Sam at the end. Right now is tax-free, but I will have to pay at the end. And if I can't make that payment at the end, then interest would kick in. But because I'm using that additional money also to throw at the mortgage, that's helping me to reduce my principal. So all I got to do is put that to the side. Now the banks, I was sending the taxes and the insurance to the bank. All I have to do is simply now just leave it in an account and it's going to build up to help keep the principal down every day. And as I go along throughout the year, so the 900 that I was paying in January will stay with me. Then the next 900, that's 1800, the next 900 and 2700. So by the end of November, I should have that $9,000 that I was paying on 3 properties inside of this HELOC, bringing down my principal. But this is just one image that I'm showing in one particular month of January. Now, when I make a payment of 1686 into my the account, then I can also, I'm still having that debit card, I mean that HELOC, and you get a debit card with it, and you can kind of like use it as for charges. So I'm still paying my bills out of it. Then I get paid again on the 28th. That goes in to the HELOC also, and again, I'm still paying my bill. But the great thing about it, you can see that the daily interest rate is starting to drop. So at the 1 year, and I thought I put it on this chart, I would have paid about $2,000 in interest. And on this other end, I would have paid $800 for the 30 year. But within probably, I think 1 year, and I'm had to include that in the chart I do again, that $2,000 that I'm paying in interest will quickly surpass the 30 year within a couple of months. So I'm gonna try to pay at the 18% highest rate I can so that I can knock this out. Now, and moving on to some other things, um, as I look to make changes in my life, I also got to be aware of what's going on around me. Typically, sometimes I'll stop by and get a burger, in general for Burger King. I used to, also, so enjoy just every once in a while stopping. In 2020, when I first moved to California, 2 burgers and 2 fries was $3.99. Now in 2024, 2 burgers and 2 fries are $5.99. That's a 15.3% increase. So definitely want to be aware of changes in food prices. Another change was, this is a change in the technology that I'm using. When I first picked up this technology, I paid 104%, $104 in 2023. This year I paid I paid 159. That's a $52 increase. I want to also go back to, I'm sorry, the Burger King example. Let me make sure I had that percent change correct. If you bear with me for one moment. But even technology is changing around you, and I'm unable to pass on the change. I can't pass on a 50% change to my clients. It's in general. So we also want to be aware of the changes that's made. I think the Federal Reserve System, as we talked about changes, they have a target of 2% annual increase. But as you can see, some of these additional companies do not necessarily follow the 2% increase. And if you look around your community and neighborhood, you may not see that change. Okay, 50. Yes, okay. I'm gonna go back to the previous slide. That should be a 50% increase. I'll go back and edit that. Okay, these are again, the three properties I purchased them between 2005, 2009. This is just some of the general information, the rents that are collected, in total, the mortgage and how much are left. And again, the principal remaining balance, I think I owe like 145,000 and paying that down. What's the next step? The next step is to prepare for day 14. This is actually day 13, day 14. So I'm gonna continue to research the various debt instruments, like HELOAN, HELOC, the all-in-one, and velocity banking, and bring what I've learned back to the YouTube channel, and continue to inform my clients and also individuals that are interested in working with me. So if you're interested in working with Dr. Financial Literacy, or if you have any questions, please definitely give me a call or shoot me an email with any questions or comments of what I presented, and I'll be more than happy to work with you, speak with different groups, and just try to improve your credit reporting and credit with the business and other aspects of it. So thank you again for stopping by for this 13th day, and really appreciate your time. Thank you very much. You have a great evening, everyone.